Merck and Pfizer both announced first quarter earnings this morning, beating estimates on the bottom line and offering guidance in line with Wall Street expectations. We are joined now by Sam Isley of OrbiMed Advisors, one of the world's most prominent healthcare investors. OrbiMed owns shares of both Merck and Pfizer. So, Sam, let's start with this. The results you've seen this morning, are they enough to make you want to own more?
There's surely enough to make us want to own it. Now, whether or not we put extra purchase orders in today is an open question anyhow. I wouldn't comment on that. It's nice that the first quarter was higher than most people's expectations. It kind of puts some of the result in the bag for the year, but the companies did not change their guidance. Both of them reaffirmed existing guidance or guidance that was in line with expectations. So, for the full year, nothing is anticipatorily better than expected, but it's, something's done, and maybe they come out a little bit higher than anticipated. Maybe the shares will go up a couple pennies each.
Sam, for the most part, these stocks are execution stories. Pfizer busy digesting Wyeth, Merck busy digesting Schering-Plough. Did you see anything in the press releases thus far that give you a sense of how they're performing on a product basis? Anything encouraging there?
I didn't see anything too remarkable. Merck seems to have the more vibrant current growth and probably the better growth for the next 5 years or so. Their diabetes line, Januvia and related, is just soaring along and looks very good, and it's papered over some of the patent losses they have elsewhere. The Merck guidance for the next 3, 4, 5 years is high single-digit growth at the top line, or excuse me, at the bottom line. That's pretty satisfactory, and the good yield of 4%. That makes it right on track for a solid investment.
Sam, if you like the Merck growth story that much, why own Pfizer?
Well, Pfizer's cheaper. They do both yield 4%, but Pfizer is cheaper, and Pfizer does have a very important wild card, and that is a candidate. It's not more than a candidate. It's not a product here for Alzheimer's disease. Now, such a drug, not this one particularly because it's an infusion. It's something that has to be injected. But such a drug in pill form for Alzheimer's, one of these days ought to be the biggest selling drug in the world. So Pfizer's got a little bit of a leg up there, and in the discovery on that area, but nothing absolutely concrete yet.
Sam, let's talk about industry consolidation. We mentioned Wyeth, we mentioned Schering-Plough. Those were both mammoth deals struck early in 2009. But since the Schering-Plough deal in March of last year, we have not seen a merger in the drug industry for more than $10 billion. What do you think the prospects are for a little more M&A activity right now, and where might we see it?
M&A activity has been part of this industry for decades. It rather started accelerating in the 1990s and slowed a bit even in the late 2000s. But it surely is going to continue. And you've got about 15 participants right now that we characterize as sort of worldwide distributors. They market products that they discover themselves. They market products that they license in from others. Some of those are going to combine. For example, we don't think AstraZeneca sticks around as an independent company very much longer. A couple of the smaller ones with smaller market shares might fall into the hands of big guys. I would expect, let's say, one in the course of this calendar year, maybe one in the course of the next calendar year. They're not going to come fast and furious. But that's the combination of the big fellows. With respect to smaller companies, where you see the acquisition of discovery or products on the market or products close to the market, that's going to keep coming at a rapid pace. And we have right now pending the Japanese have moved in. We have pending right now the Stellus bid for OSI Pharmaceuticals. It's not $10 billion, but it's $3 billion. So we're going to see a whole lot more of that take place in this year and next, and for the long period of time.
All right, Sam, thanks for joining us.